Good morning. Let me reload the coffee. Sorry I'm a little bit tardy, but our morning meeting went a little long. It's all right. We got a busy week. Oh my goodness. Calendar's full. $8:30 in the morning. I've had a liter of energy drinks and a liter of coffee. Wow. Guess I gotta find out where the music's coming from. I guess it's that. Where is she? All right. Whatever. Mediocre. All right. Welcome to Forex.Today. So why do I have Investor Bootcamp up? Well, we are going to do something cool. Every Wednesday, we are going to do live watch parties, and we do the monetary policy, central banking, and monetary policy course. We're going to watch live together every lunchtime on Wednesday, noon Eastern time. And we'll go through the entire course together. Meanwhile, you can ask questions, and we can stop the video. We can record it, but we can stop the video, and I can explain things, and we can discuss things and all that kind of stuff. So we'll go through the course together. And it's kind of like, look, you need to do this. You need to understand how central banks work. You need to understand monetary policy. This is what dictates the value of a currency. So you have to understand this. Maybe you watched the video course 5 or 6 years ago, 7 years ago. But it's time to kind of sharpen your saw. So we all need to do this. Maybe you don't want to do this, but you need to do this. So we're going to go through it together and make it fun and interactive and go through the entire course, which is 12 Wednesdays. And then at the end of it, I'm going to then teach you the new policy framework used by the Fed, because the old methodology they are not currently using because of the increase in their balance sheet and the money supply due to, right, the 2008 great financial crisis, but also COVID. So I'm going to update you on the new policy tools and framework used by the Fed. So the whole idea is, okay, log into Investor Bootcamp and you sign up to attend the live watch parties. And guess what? You can pay whatever you want. You can pay, right? Well, the minimum is 10. Then you attend, and then I give you the update, right? So it's quite literally pay what you want. You can chip in $10, $25, $11, $1,568. Okay. So, anyways, just log into Investor Bootcamp and click this button right here. That's an update. So, you will be an expert in monetary policy used by central banks around the world. And then you will become an expert in the new framework used by the Fed under current economic conditions, and why we're in these conditions and how we got in these conditions. And then, and the Fed considers that they have two frameworks. And so we're in the new framework, and well, maybe we'll go back to the old framework. So you got to know all of this, so what I was explaining before. Oh, well, there you go. So do you remember doing this? The money supply, demand, right? Money supply and demand, and interest rates, and the quantity of money and open market operations. Also, the idea of 1 over R plus E, right? Required reserves plus excess reserves equals the money multiplier. This is not how it works anymore. We'll probably might go back to this. This is how other central banks work, but the Fed doesn't do that anymore. And yet you're a Forex trader. And if you don't understand how the central bank works, then you just don't understand why the value of money changes. So I think you have to know. So anyways, just log into your Investor Bootcamp account. And like I said, you just click on the button, un bouton, and you can pay what you want. Simple enough. Pay what you want, my friend. Pay what you can. Cool. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Cool. So we're going to go through the TRADARS analytical research platform. I just want to show you the emails I received recently. At the London Open, we got a score flip. Oops. Okay. 4 hours ago, we got a Euro Yen flip. Now, this is a correlating one. So this comes out pre-London, pre-New York. This comes out when it happens. So this is a real-time alert. It came out 4 hours ago. Potential 24 pip scalp with a 67.03% chance of success. And this is what it looked like. Boom, boom, boom. So I'll get rid of that. Get rid of that. This is our Traders Way MT4 platform. Cool. This is a swing trade from last week that's already working. All of this is stuff we do inside of TRADARS. The cool thing is, so I use Traders Way, and I have all my chart templates. The idea is that if you're going to use our execution partners, I want to give you the chart templates. I think people used to pay what, $200, $100, $200, I can't remember. For my MetaTrader setups. So my idea is, if you're going to use our execution partners through TRADARS, I'd like to just give them to you for free. So I'm setting that up. But if we go back to TRADARS, the other interesting thing is, if you're going to use our execution partners, check this out. Once you set that up, check it out. We'll actually give you some of your spread back after every trade. So at the end of the day, let's say you made 3 trades. At the end of the day, which is rollover at 5 p.m. New York time, or whenever the server rollover is, it'll look at the trades you made. It'll take some of the spread that you paid, and it'll give you back in cash, real cash, into your account. Cash you could withdraw, like real cash. Not a credit, cash. So I thought, wouldn't that be cool? Your spread becomes a little cheaper, and you have all my charts. Yeah, that sounds good, right? Yeah. Anyways, so this is a swing trading group. We do it on Thursday. So we were on the green candle when we created Plan A. Friday's here, Monday is here, and we're already on the move, otherwise known as Oscar Mike. Isn't that cool? Yeah, so we do that on Thursdays. Thursdays. So let's go to the platform and do some fundamentals. Actually, you know what? Well, no, we'll go. I forgot to do the headline radar. I should probably create a splash screen for that, just as a reminder. Do the sentiment radars first. Wow. All right, so let's do our macro. Okay, right now the world is quiet. Okay, looks like on our hit list, notice how much it's changed just in the last few days. But very bearish on many of the yen pairs. Now, dollar is strong today, so I'd be careful of this one. But like we saw, pound yen is bearish, but we got that email that said on multiple time frames at the same time, we had bearishness on pound yen, which led to a scalping opportunity. And that was emailed immediately as it occurred. So it's maybe come and gone already. But notice how like that lines up fundamentally. This being on our hit list for selling has nothing to do with the technical analysis that TRADARS did. This is comparative analysis of macroeconomic data. So all of a sudden, when your technicals and your fundamentals line up, it should catch your eye. Yeah. Gold is doing its last hurrah. It is moving, both technically, seasonally. See, gold is bullish. It's got a strong score. Seasonally, it usually goes up in August, and the chart says it's technically is going up. Notice how all these are lining up. Now, this one doesn't. So what's going on here? Aussie CAD, bearish. Okay. So Canada is doing better than Australia, according to macroeconomics, although I might actually argue against that. But that's opinion based. Quantitatively, Canada's winning the show. Seasonally, Aussie CAD is usually down, but it's up. And that makes sense to me because I actually download and read the report. So last night on a Sunday at 7 p.m., we gathered at TRADARS as a group, and I downloaded and read out loud economic reports from government agencies from around the world. Definitely one or two reports out of Australia, definitely one or two reports out of Canada, and even New Zealand, because I remember comparing Australia to New Zealand, but also Australia, New Zealand compared to Canada, and they're quite different scenarios. So even though the headline numbers suggest Aussie CAD down, okay, the quantitative headline numbers, the subjective side of it is if you actually read the reports and what goes into the numbers and what goes into the opinions and the thoughts of, let's say, the central bankers themselves, I would actually lean towards Aussie CAD up, and that's what's actually happening. This is why we do. Yields are going up. Gold, oil's going up, and even though gold's got a good score, it's a dip. It's a dip today. Well, maybe that's an opportunity to be long tomorrow. This is where you need to be making decisions. Gold's down. Yeah, but if you're a long-term bull, okay, then you look at the scatter plot and say, wow, this is out of position. Maybe that's an opportunity. Silver is out of position. Maybe that's an opportunity. Nikkei is up today as expected. Bitcoin is up today as expected. See? So that might be an opportunity. This is already done. S&P 500 basically at all-time highs. That'll be interesting to see if we have a break or a rollover. Dollar way down to 98.5, and Bitcoin way up. Remember last week we're at 117, 118, 117, 118, 117, 118, 119, 120, 121. Yeah, so finally got it there. Today, you should by now have already reviewed the Commitment of Traders report. This is part of your macro analysis, and you should have all the net changes done. Okay, you're supposed to have done this already. Now, on Friday, when the CFTC, the Commodity Futures Trading Commission, issued the report, I was emailed immediately and got an update. It's already, right? So you get email summaries, and then you have the visual report. Okay. And it couldn't be any easier for you. It can't be any easier. This is what I did, CFTC. Look left. CFTC.gov. This is what I did 20 years ago. Okay, I'd go to the CFTC. I'd go to the Commitment of Traders. I'd go to the financials long format, and this is what I would. That's work. Yeah, it would take at least a day, a whole day. I'm analyzing the Canadian dollar, right? And what hedge funds are doing. and the changes. And then I'd do it for Swiss franc, and I'd do it for British pound, and I'd have to look at every column and every number, really, really think about it, and Japanese yen, and okay, so on and so forth, Australian dollar, Mexican peso, okay, Kiwi dollar, South African rand. This takes work. And you want to look at asset managers and leverage funds and non-reportables, which are us, and all this kind of stuff. It's real data, and it shows the capital flows of institutional investors. What do you think changes the value of a currency? Central banks, but also capital flows. This is what we do as Forex traders. So instead of doing this, what I built for you is this: capital stock, and then the change week over week capital flows. And then you can really do comparative analysis of, look at this, euro dollar, euro's green, dollar is red. So investors got out of euro a little bit last week, but got out of dollar a lot last week. Really? Oh, you don't know that? Well, it was emailed to you. And it was we downloaded it and organized it. We made pretty colors, put it into a database that's easily manipulated. And you're still not doing it? You can do this one for free. But why would you not do it? I just don't understand. I don't understand why you don't want to understand. Now, here's the cool thing. We do this together at TRADARS. Okay. So I'm your Harvard-educated economist working on your team. Yeah, isn't that cool? I work for you. I'm on your team. Cool. So let's do some technicals. So I showed you my trade plan that we did in our swing trading group. Okay. So the question is, what will dollar strength continue throughout the rest of today? Okay. Well, we can look at the charts. And, okay. We can do our charts. This is what we call technical analysis. But you can use TRADARS to do pattern recognition before you open your chart. It's going to save you time. But, okay. So what we did last week, you see the theme here? Not now, not today. Last week, we analyzed this. And the trade plan on the short run is down to here, but longer run down to here. Nothing on this chart says up. Now you're like, well, 21's above 55. Yeah, that is true. But this chart is set for bearishness. So you might see 21 above the 55 is, not ideal. Yeah, okay. That's good analysis. But my eyeballs see it this way. Now you can see longer term, or longer term, but another perspective is on my charts as well. Okay. Now this is all different sort of variations of technical analysis. So you might thread this needle and say, okay, down to here and then back up. Yeah, that's cool, man. That's cool. That's cool. Yeah. So why point it down? Well, there's no disrespect for euro. I have to combine reality with normality. That's the tricky part. So I'll make up a number. I don't. The number I'm about to make up is not accurate, but it's not wrong. Let's say. But what if I told 80% of the time the dollar is strong this week? What if you thought that was true? What if you actually could prove it? Would you sell the dollar if 80% of the time it was strong right now? Well, I hope you wouldn't say, well, 80% of the time it's strong, so I'm going to sell it. I hope you say, well, 80% of the time it might be strong, but it's not strong now. Okay, so now you're either short-term short the US dollar, or you're not confident it's going to last. Well, one way that I deal with this conundrum of reality versus probability is that I can say, well, at the very least, we can anticipate a high probability of euro dollar rolling over. Okay, now if it rolled over, where would it roll over? Well, we have this as an issue. Okay, and we have this as an issue. So this is what we talked about last week. And then we saw this support became resistance. Okay. And so we can do technical analysis of, okay, there's a plan that could look like this, or there's a plan that could look like this even. Not that it's going to happen, but it's an if then. If euro dollar rolls over this week, and remember, we did this Thursday last week. Okay. Richard says dollar gets strong from now till the start of December. No, I don't think that is accurate. Okay. But, okay, if it rolls over here, then, so it starts with, okay, what is normal? So we'll do seasonality, right? If it usually falls, okay, and if resistance holds, because now this is like fundamental. So we know this to be resistance. So if that holds and a lower low produces a lower high, then that would be the trade, and perhaps you take the risk. What's up, Osamu? You see, like, it's not a prediction. It's now a combination of fundamental and technical analysis. You're trading as much as possible with probability. Which ain't a bad idea, I think, right? So many windows. Okay. Wait, did Bitcoin just drop like a ton of bricks? Let me open that up. Now, I know you're not looking at it, but I'm looking at it. It did just drop like a ton of bricks. All right. Well, let me show you what I'm talking about. Wayne, what do you think about Bitcoin? That's what I think about Bitcoin. So we just looked at it and it was like 120 and a half. Now it's 119 and a half. It just dropped $1,000 and it's already updated inside of TRADARS. We're neutral. Okay. August is a good month for Bitcoin, but the future looks dim. Oh, you should know that. You don't know that? Too bad, so sad. So, anyways, maybe some vulnerability here. Now, it has been going up. We just went from 117 to 121 and a half. But that whole period we were neutral. But you're like, but it's bullish. It's going up, Wayne. Uh-huh. So what does neutrality with bullishness produce? Well, you're vulnerable to tops, and look what just happened. Oh my goodness. On the annual R1, shut the back door. Not random. And now we look at this and say, well, the probability is that in past performance, which does not predict future results, but in the past, okay, we see a decent retracement over the next 4 weeks, could be 6 weeks. Now, we don't know if that's going to happen. This year is different than many. Okay. But retail's heavily long and institutional is not. Retail's heavily long. They're jamming their stops. What if we take out those stops? So the seasonality has an interesting impact on the analysis, or at least it should. Aha. So should I be confident in bullishness? No, it doesn't make you have to be a bear. But, here's another look at Bitcoin. This is our drilling into our seasonality tool. Okay. So we typically, this July to August period is topish, and July to August is down. So we're double topping, and that's a pretty normal thing to do. Double top and then a drop. And then somewhere in the next 6 weeks, we buy it back. Oh, how do you trade not knowing that, huh? It's crazy, right? How do you trade not knowing that? So let's take a look at the Treasury market, because again, as a Forex trader, and we are at Forex.Today, we want to know the direction of capital flow. Is money moving into the Treasury market or not moving into the Treasury market? Now, this matters because the Treasury market is probably 10 times bigger than the stock market. And when I say probably, most likely it's significantly more than 10 times bigger. Yeah. So what's happening in the 10-year T-note market? Is money flowing in? Is money flowing away? And for this, we should probably look at the 15-minute chart. We should look at the 30-minute and the hourly and the 4-hour and the daily. And we should look for the top 20 most reliable, repeatable patterns that consist of moves towards support and resistance for scalps, breakouts of support and resistance for scalps, and pullbacks. We should probably look for up, down, and sideways trends. And we should probably look for Fibonacci reversal patterns like Gartley's and so on and so forth. So let's do all of that, and let me show you what I found. Nothing. Now, it might be going up or down. Oh, for sure. But there's no reliable, repeatable pattern right now in the 10-year T. Not worth your time. Yeah. So that just takes seconds, of course. Now, how do you guys feel about gold? You like gold? Should you be bullish or bearish? Should you be long or short? Should you be aggressive or conservative? The only pattern, reliable, repeatable pattern, is on the daily chart for gold. They both say up. Okay? One shows consolidation, and the other shows that as we enter the zone of the apex, we might break resistance around, well, we have 3453. And in the future, maybe we get a break like this. So that's for you to determine. This pattern shows that, we need to get into the apex and then out. So the way to use that is your primary buying line, if you're going to be a bull, is this. This pattern is non-directional. This pattern is non-directional. So now you'd have to make some assumptions, and that's where your fundamentals come in. What's the direction of the US dollar? What's the direction of inflation? Is inflation higher or lower than GDP? What is the normal seasonality of gold? What is the monetary policy of central banks? Are they buying gold or are they selling gold to achieve their mandates? Oh, Wayne, that's complicated. Yeah. Now, I'm going to give you an extra special treat. Instead of, what do I call it? Viewer's choice. Instead of viewer's choice, I'm going to give you the S&P 500, the DAX, and the Dow. Okay? We're going to look at all 5 time frames on 3 assets. And this is what I found for you. You ready? 3, 2, 1, go. Okay. Down channel emerging. And you have to, in your mind, imagine that this S&P 500 is kind of toppish. Well, right now it's showing bearish with an opportunity. Now, NASI, which includes the Mag 7, which are companies that make more money than God. Guess what? It shows more bullishness than the S&P 500. Why? Because sales are up 100% quarter over quarter. But that's not typical. That's very, very, very unique to NASDAQ companies. Not all companies in NASDAQ are like that, but on average, it gets pulled up. So it would be the last one to short, but not a bad thing to hedge at the right time. So anyways, rising wedge is bullish with an opportunity on the 30-minute. Channel up, okay, is strength on an hourly. However, there's a threat. Threat. So how do you trade the threat? Let it break, sell the pullback. That's what it's done. Oh my goodness. That's how you're supposed to trade it. So now, if you are a bear on NASDAQ, uh-oh, spaghetti-o, maybe there's a threat. Okay, and this rolls over. Well, that's one of the things I'm looking for today. Yeah. So that's like, hey man, hey Wayne, that might be happening. Cool, put it on my radar. Dow, even a higher high is likely to create a lower low. That's what this said. But you've had that heads up for 3 days. S&P 500 daily is still showing bullishness. Okay. NASDAQ daily still showing bullishness. And that's it. Done. Short-term vulnerable, long-term trend still in play. Maybe that's why we're in a scenario of bum, 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 bum. Neutrality. Let it load. Okay. There we are. There we are. So I'm going to end where I probably should have started, and that's to give you the headline news radar. Let's see what's happening right now. Or let's hear what's happening right now. Euro US dollar technicals. Euro US dollar falls to the next key support target. Euro US dollar price forecast. Bears gain confidence as trade tensions mount.
South African manufacturing output rises 1.9%.
US dollar Swiss franc joins the US dollar higher break.
Oil prices bounce after losses ahead of US-Russia talks. Wall Street aims to open marginally up. Gold Reserve asks U.S. court to proceed to sale hearing in Citgo auction.
Pi Network price forecast. PI flashes bullish potential as breakout rally gains traction.
TipRanks becomes one of the first major financial companies to enter chess space. Markets brace for inflation data from the U.S.
Cool. We have, in 15 hours, we have the RBA interest rate decision. 16 and a half hours, we got the UK jobs report. And then CPI, 23 hours and 9 minutes from now. CPI in the United States of America. Then later in the week, we got PPI, we got retail sales, we got UMich. Super, super busy. Okay, this particular week. Okay, if you just want to focus instead of on the entire radar, you only want to focus on the news that has both volatility and reliable, repeatable patterns. Okay, RBA interest rate decision, UK jobs, German ZOO, US CPI, UK GDP, US PPI, GDP out of Japan, US retail sales, and UMich all have reliable, repeatable patterns inside of volatility so that you can plan your trades accordingly. Wowzer. These are the things that are happening right now. If you just want to skippy scalp at the open, you want to look at the scalping radar. Okay. Now you can say, well, why don't I only want to scalp the stock indices? Cool, man. Shows vulnerability to the downside. 75% chance. Oh, wouldn't you like to know? Yeah, pay the money, bro. Okay, we've already burned through all our vol radars. This is all the implied volatility showing that yields are likely to go up. Oh no, I don't want yields to go up, but that's happening. And then, have you read hundreds and hundreds and hundreds of articles this week to get your Forex on, for example? How does the market feel? Okay. How does the market feel about pound yen? Well, there you go. And how has it changed over time? That's it. I'm done. Peace on earth. May the pips be with you. May your profits be above average. Hey, trade with TRADARS. We'll lower your spread, and I'll give you all my chart templates and some other forms of love that you might enjoy. Sounds sexy, doesn't it? Well, TRADARS is sexy, quantitatively, that is. So again, peace on earth. May the pips be with you. May your